welcome to Shore Support, a program that highlights organizations who enhance the lives of our community. I'm your host, Nathan Magno, and on today's episode, we'll be discussing about financial assistance. Tax season, perhaps one of the most dreaded seasons when it comes to thinking about money. Joining us now is Frank Minetti, Certified Public Accountant for Minetti Standard. Thank you for joining us today, Frank.
Thanks for having me.
Tax season is here, and the deadline to file for both state and federal taxes is April 15th. As a certified public accountant, where do people need the most assistance when it comes to filing their taxes?
We find that people need the most assistance when there's some sort of change in their life. Maybe they receive an inheritance, or they're getting married, or they're retiring. The two things that are important to consider. Number one is make sure that you talk to an expert. You might want to talk to a family member, you might want to talk to a coworker, but really what works for them may not work for you. And second, you want to make sure you get advice that's specific to your situation, because you're typically making a big decision. If you're retiring, your income is going to change significantly, potentially. So it's not something that you want to leave to just general information like we're sharing here, which is a great start, but you want to make sure that it applies to you specifically.
And as taxpayers, we want to avoid owing the federal and state governments and possibly get a refund. What is the best way we can manage our withholdings?
The IRS Form W-4 is the best way to do that. The IRS has updated that recently in the past couple of years. It is much more accurate in estimating what the proper withholdings will be. If you have a change in life, if you get a new job, if you get a promotion, things like that, that's a good time to look at your withholdings, or maybe if you plan on having a child going into college or leaving college, you want to look at your withholdings before that happens so that you can withhold across the year rather than at the end. A good example, let's say somebody gets a new job. If they're making the same amount of money, maybe they notice their paycheck goes up. So that's a good indication to look at your withholdings, because your withholdings may have gone down. So if you look at last year's tax return, take the total tax, divide by however many times you're going to get paid during the year. That's what your withholding should be. So if your tax was, say, $5,200 last year, you get paid 52 times once a week, then you should have withholdings of at least $100 a week to make sure that you're sufficiently withheld and you don't have a balance due at the end of the year.
Right. Take account of that. Take account of any financial changes in that regard, and compare it to last year's financial situation.
There's also a great an estimator, tax estimator, withholding estimator on the IRS website, irs.gov.
Good, that's helpful information. And can you walk us through the importance of understanding your tax return? What should individuals pay attention to when reviewing their tax documents and terminology?
Well, it really helps to understand your tax return to make sure that you owe the lowest tax possible. You want to make sure that everything that happened in the past year is accurately reflected on your tax return. So if you move or something like that, your preparer might not know that. So when you have an understanding of what's going on in your life, you're better prepared to do your tax return or talk to your preparer when it's time to do that. The tax return also tells the world what you make. So if you're going to refinance, or you're going through, say, unfortunately, a divorce, if you understand your tax return ahead of time and you're sure that it's accurate, it saves problems down the road. So if you refinance, the lender will ask for what return was filed with the IRS. They'll go directly to the IRS and say, what's the return that you have on record? If there's a mistake on your return, that's not when you want it to get found out, because it might delay the closing, it might affect the deal. Especially in divorce cases where you have to explain to the judge why your tax return is wrong is never a good sign. Two important numbers on the tax return are AGI, or adjusted gross income, and really total tax. Those to me are the most important numbers. Really, just a balance due or refund doesn't nearly tell enough of the story. Your adjusted gross income is the number that determines what deductions you can take, what credits you can take. If they're dependent on your income, they're usually based on that number. The total tax is important to know so that you can compare your return to last year. So if my income went up, my tax should have gone up. If my income goes down and my tax goes up, that's still a possibility, but it's something you might want to check into.
Right. Always best to be proactive in checking your finances in that regard.
Right.
So what are some new tax deductions or credits available to New Jersey residents that they might overlook?
There's one old deduction that people tend to overlook and one new one, or a couple of new ones for education. The deduction that New Jersey residents tend to overlook is medical expenses. Most people think that they don't qualify for federal, so they don't think about it for New Jersey. So for federal purposes, your medical expenses have to be more than 10% of your adjusted gross income. There's that number again. And you have to itemize. So for most people, medical expenses don't give them any tax benefit for federal. But for New Jersey, it only has to be more than 2% of your income. So it's much easier to have enough medical to qualify. And also because of the way New Jersey does tax reporting, if you have medical insurance withheld from your wages, you can deduct those expenses, those insurance premiums for New Jersey, while you wouldn't be able to deduct them for the federal. The new deductions, like I said, are all for education. For New Jersey, you can deduct up to $10,000 for tuition paid to a New Jersey college, $10,000 paid to an NJ Best state college savings plan, and also $2,500 in loan and interest payments made for NJ class student loans. And there are income and some other limits that apply, but it's a good deal. That's new since '22.
Ooh, wow, that's actually really nice to know that those bases are all covered for us.
Yeah, that's been something that's in the works. That's been in the works.
And so that's taking it from a state level. Are there any new federal tax deductions or credits available to residents this year?
Well, the one new credit for residents is the energy efficient improvement credit. That's for residential homes. It has to be, the improvements have to be for your residents. They can't be for new construction. The old credit used to be the residential energy credit. You had an annual limit, and then there was a lifetime limit. And once you met that limit, there was no more credit. This credit, the energy efficient credit, has the same, also has annual limits, but there's no lifetime limit. So you can go back each year and apply for that as long as it's as long as it's up to the annual limit. So that's a big change. You want to make sure that you purchase equipment or services or systems that meet this requirement. So there's a fairly high energy efficiency requirement that's in all the government instructions that you have to meet to get this credit. So you want to make sure that you meet the credit when you're deciding what unit to buy or how much money to spend and things like that. Whether or not you get the credit might make a big impact. Doors qualify, windows qualify, insulation, also air conditioning units, any kind of heating system, so a boiler, a furnace, hot water heaters can potentially make the credit as well. There are also two credits I think are worth noting. The earned income credit, which is available to lower income individuals that work basically, whether or not they have children, and that could be a couple $1,000s. That's a worthwhile credit. You do have to be careful with that because there's a lot of scrutiny. The IRS is really looking at that, so there's a penalty if you take it when you shouldn't. So you want to make sure you qualify. And then the child tax care credit also is available for people who work and who have child care, which is, it's not as lucrative, there's not as much money there as the earned income credit, but it is some money.
Right. But no, it's really important to understand that these are some new tax deductions coming up to available. So it's always good to be aware of any new supplements such as that.
Yeah.
And so Ocean County has one of the highest senior citizen populations in the state. Are there specific deductions or credits available for them living in New Jersey?
The thing to know about New Jersey taxes for seniors and anyone over 62 or who's disabled, there's what's called the pension exclusion. So you can exclude up to $100,000 of your income if you're married, $75,000 if you're single, $50,000 if you're married filing separately. Once your income goes over those numbers, the credit either goes away completely or it tends to be phased out. So you have to be careful if your income is up around that number if there's anything you can do about it, it makes sense to plan ahead for that.
And today, almost all business can be done online, and more people are taking advantage of that convenience. How can residents protect their personal information when filing electronically?
Well, really, filing or not, all personally identifiable information should be secured. It needs to be sent, in my opinion, it should always be sent either protected by a secure password, a strong password, or using a secure portal. There's no reason that I can think of why anyone would send any kind of personally identifiable information, including tax information, any kind of W-2s or my last year's tax return and things like that, to anyone just by an attachment, not your accountant, not your lawyer, not your loan officer. We're not talking about just your name and your address here. Now it's your name and your social and your address. It's your banking information. It's the name and tax ID number of every business that you own. That's just your information. Your kids' names, your kids' socials, maybe where they go to daycare, maybe where they go to school, and from that, maybe where they get off the bus. So it really has far-reaching implications. It's very important to make sure that when you're sending your information, to not just send it as an attachment that can be read by anyone.
Right. And especially when working with a professional service can be expensive, and it's not a luxury many residents can afford. What programs are available to low-income members of our community?
Well, there's always the IRS phone number and the New Jersey number that's available to everyone. As far as physical locations, physical tax preparation assistance programs, the IRS and New Jersey have a VITA program, the Volunteer Income Tax Assistance. They have sites. They have 2 in Monmouth County. Unfortunately, there's none in Ocean County, but they are statewide. AARP has offices in Ocean County. United Way of Monmouth and Ocean County also has tax prep assistance as well. Or you can go online, irs.gov. You can use one of the vendors, one of the software companies that they support, and you can file your return for free as long as you meet the income requirements. And they also let you file New Jersey returns as well. So sometimes there's a fee, sometimes there's not. And then New Jersey also has their own website, but it's just for the New Jersey return.
Right, right. Well, thank you so much for your insight today, Frank, as this will very much help for a lot of members of our community to get through tax season. Frank, thank you for taking the time to be here with us today.
You're very welcome.
As a reminder, taxes are due by April 15th. For Shore Support, I'm Nathan Magno, and thank you for watching.